Hello everyone. I hope you all are doing wonderfully fine. Welcome to my channel. So this is a video about FHSA account, first home savings account. We are going to explain a little bit about what kind of account is this, why it's beneficial for those who are looking for purchasing their first home, what is the eligibility criteria of this account, and how this account is combines the benefit from the TFSA from the RRSP. So let's start the video. The first one is, what kind of account is it? What is FHSA account? When it happened, when it introduced. So first of all, FHSA account, which is called First Home Savings Account. This account is registered through the government of Canada. It introduced or launched on 2023 November something. This account has no benefits. Some are from the TFSA, some are from the RRSP. What are from the RRSP? Tax deductibles. Whatever the money you're gonna put inside, it's gonna be tax deductible. This is a great advantage of this account is. The second one is taken out from the TFSA. Now I'm talking about the RRSP account. I'm talking about the TFSA accounts. These both are also registered through the government of Canada. These are the registered products. Now from the TFSA, it's taken the advantage of tax-free withdrawals. Now if you are withdrawing from this account for the purpose of buying your first home, then you don't have to pay any taxes on the withdrawals. But if you are thinking that you're not going to purchase your home, then you have to pay the taxes. Then it will not be a tax-free withdrawals for you. So this is about the TFSA account. This is about what is the first home savings account. So let's move forward. What is the eligibility criteria of this account? So the first eligibility criteria of FHSA account is the person needs to be 18 years or older. The second one is the person needs to be resident of Canada. The third one is that person should not be an owner of any home for the year he is opening this account or the last 4 years. Now, if I am owner of a home already in the last it was on 2021, for example, then I will not be eligible to open this account. Okay, so this was the eligibility criteria. Now we are gonna talk about what are the tax deductible contributions are. On this account, the lifetime contribution limit is 40,000. Every year it's 8,000. And one more thing is, if I am opening an account, for example 2023, my contribution limits for this year will start right after I open this account. It will be 8,000 for 2023. Another carry forward allowance for this account is I can only carry forward the only one previous year's contribution, not more than that. Now let's take an example. If Harry already opened an account in 2025, let's assume, he can take, now if he haven't contributed anything on 2025, on 2026, he can contribute on 2026 contribution as well 2025. If in the 2027, he wants to put money of 2027, 2026, or if he wants to put 2025's money also, then he cannot, because this is the rule. You can only put money contribution of this year's and the previous years, no more than that. Now there is another thing, that there is a penalty. So what are the penalties on FHSA over contribution? Like the other registered products, this has also penalty of over contribution. Whatever the amount you're over contributed, you have to pay 1% tax on that amount until the amount is withdrawn from the account. Now this is not only on this account, this is also in your TFSA accounts, in your RSP as well. Like all the registered products, they don't want you to over contribute. They don't want, like government don't want you to take benefit of, like excessive benefit of it. Whatever you're allowed, you should only do that one. But if you're going more than that, they're gonna come back to you. Okay, so these were the penalties of this one. What are the tax-free withdrawals? Now, as I already mentioned when I started the video, if in the future I want to purchasing on a home, I can open this account. Yes, if I have decided to move forward for really withdrawing it for the home purchase, it will be tax-free withdrawals. But if in case I cannot really go forward with the home, then there is will be tax-free withdrawals. I have to pay the taxes and I can take the lump sum amount from it. Just not the lump sum, there are other options also. The another options are like I can take out the money from this account, I can put into the RRSP, but I also need to have the RRSP room of that year if I want to forward, like transfer the money. Or I can if I am like 71 or so, I can also move to the RIF account. I can also transfer the amount in my FHSA. If I'm not going forward with the homeowner, then I can transfer the money to the TFSA. So whatever the transfer, it's a really interesting thing that if it's a registered product is like an umbrella, just sheltering your money to grow tax-free. If I want to transfer from one to another, I don't have to pay any taxes. This is called sheltered tax transfer from one to another account, which is a registered account. Okay, so now as we have explained what is the carry forward allowance, over contribution penalties, tax-free withdrawals, now we are going to talk about what is in a seizing of the account. Now, if this account going to be seized on the 15th anniversary of the date the individual opened the FHSA account, or the individual turned 71, this account is going to be closed afterwards. The another one is the death of the participant. Now, this account has also the option of adding the beneficiary, like successor annuitant. Either I can add common law or my partner of these, like as a beneficiary of the account. Okay, so we have discussed all the major ones. Now we are gonna talk about who are gonna open your account. Now, banks, yes, for sure, you can go to your financial advisors. They will be asking you questions why you need to open this account. You have to tell your story, and then if you're eligible based on that eligibility criteria, you can open this account, and then moving forward you can contribute this whatever contribution limits are there, and then you can withdraw tax-free and then purchase your home, because government also want you to save your money tax-free until this account and then withdraw tax-free. It's a greatest advantage. Now, one thing that I really want to explain here, that this is also possible in your RRSP account. You can if you have already an RRSP account, and if you ever want in the future to take out money from it and then take out the money from it in order to purchase your home, there is a called HBP plan, home buyers plan. You can take out the money and like a tax-free and then buy your home, and then like for example for the down payments for 10,000, 20,000, whatever you have the amount in there. Now in the HBP plan, you have to put money back in certain time frame. In this account, you don't have to pay back to the government, because this account is meant for you to save for your future home. Then if you have withdrawal from it, that account is closed. You don't have to go back to the government and put money, because this was only in the HBP account. This is RSP. There is an option for the HBP where you can take out the money if you want to purchase your home, but they also want you to pay back with that time frame, which is I think 15 years. If you were not successful paying back them, then that money will be considered as taxable income of that particular year. So this is how it is different from the RRSP. Now, some of the people definitely have money in their RRSP accounts. Now, if I have this FHSA account, I have money there, I have decided to take out the money, buy my home. I have also money in my RSP. I want to go with HBP plan as well. Now here's the twisting point. I can take out money from my RSP. I can take out the money from my FHSA. I can combine it and then buy my home as well. So there is an option to take out from both the registered product if you want to go forward with your first home. Great advantage. Now government is supporting you to save for your home buying, right? So go forward if you are eligible with this one. If you like meet the eligibility criteria, go forward with this account opening bit, because for me personally, I'm gonna go with this one because I am having all the eligibility criteria. And yes, I'm also planning to buy a home, not now, not in 5 years, but yes, in 10 years, that's for sure. So why not starting it today, right? So these, all the benefits in these accounts are great. If you guys have any questions here, I feel like I have covered every single thing that needed to be explained. If you guys have any questions, please comment in my like down the video, and then I will definitely explain, or I'll definitely answer the questions. Thank you so much for watching. That was my first video. So I was excited about it, and I'm very happy that I taken the first step. So please vote, guys. I'm really looking forward for your likes, for your, if you like the, if you find it valuable in any area of your life, please like, subscribe and share it. Thank you.